Customers opting for cheaper, off-brand alternatives, get the store brand instead of the Heinz ketchup, essentially. Let's ask Doug Flynn what this might all mean. He joins us now. Because there's another headline today that Mastercard's numbers were up, and I was thinking to myself, all right, so there's Americans spending money, in some cases maybe they don't have, but people who are cost-conscious don't want to use their credit card as much or are being careful. Sign of things to come, or how do you see it?
A little bit. The 25 to 35-year-old cohort is, their unemployment rate is about 2.5 times the national average. So, generally, they are, not working to the same degree. They also carry relatively a pretty high credit card balance, and those balances have gone up about 26% from where they were from 3 years ago. So people are carrying a little bit more debt on their credit card, even though like the average credit card balance is $7,000 roughly, and it's lower on the it's $3,000 for the younger people and a little bit more for older people. Relatively, they can't afford the $3,000 because it's a much higher percentage of their income, and it's harder if they lose their job. They don't have the savings. So, but it's showing based on the Mastercard, as you said, that people are still spending. And so, as we were talking about yesterday, the three Americas, if you will, the rich people, none of this matters. The middle people are doing okay. They're teetering, so hopefully they'll continue. But on the lower end, if you're younger and on the lower end, you're feeling it. And so that's where it's starting, and we're starting to see those cracks, if you will, here and there in the economy.
Sometimes, you watch like financial analysts, not you necessarily, but you watch financial analysts talking about like the president's tariffs, and well, turned out they weren't a very big deal, and because the stock market's at a record high. But there are pieces, it seems to me at least, of the economy where you're feeling it, depending on where you shop, depending on what you do, and the inflation that's, it's definitely, it's not helpful when it comes to inflation, I guess would be my point. We're basically where we were on inflation when Trump came in.
Yeah. Look, I think what happens is, especially if you're younger, you don't have a lot of experience with doing anything other than what you've always done in the last couple of years. Perhaps if you're older, you've had some tougher times and some better times, and maybe you kind of will adjust it a little bit quicker or easier. And so I think this is one of those things where people have to learn to adjust a little bit. You can't just continue to do everything that you were doing before when you were making, a lot of money, when they had overhired and they were paying you a salary more than maybe you would have expected. So those things are adjusting, and that's a look that people have to get used to. Now, of course, if you're super productive and all of that, none of this is going to be as much of an issue. But if you're not, that's around the edges where it has to start somewhere, and that's where a lot of this begins, is with some of those people. They start, not getting raises, they start losing their jobs, they don't find another job quick enough, they run up some credit card debt, they can't pay it off, and so these things happen. So, hopefully there'll be greater growth overall, and it hasn't translated to huge inflation, but certain products here and there it certainly has, and some of those might be the ones that people are using. And so Chipotle is a great example. If younger people stop going, that's a key demo for them. That's going to hit them really hard versus something that a lot of younger people don't use necessarily.
Yeah, it's an interesting headline today. It's just one of those things. Keep an eye. And remember when we saw that Chipotle a few weeks ago? Now what? So we'll see how it works out in the economy. Thank you, Doug, as always.